All right, we have a very interesting set of movements. Today is December 13th. Last time I left off, we were just at this point here waiting for a reversal, and at this point here it wasn't set to be a reversal yet because I was waiting for a dip at this particular point here, which is an imaginary line that I created, an imaginary value that I've created on the slow Stock Rsi. I've created this because this was a floor, a line of resistance that has resisted in the past and bounced back up again from this line. So once it passes this point of resistance, a new phase is now entering, a new pattern, a new trend is now entering. So this point of resistance no longer exists, and we have to update our next trend to reflect a new line of resistance. For those of you that are new to these graphs, last time I spoke about this was a Bollinger Band and two simple moving average lines here. Now I'll let you know my settings. I've got Bollinger Band with simple moving average at 5.15.2, closing at 20 and 2. Now you can message me or leave in the comments if you want to know the exact settings that I use. Now I'll be talking about the slow Stock Rsi and the settings I like to use. The length is 14, upper band is 70, and the lower band is 30. Now there is no direct rule for trading, obviously. There are certain exceptions that can be accepted when they're close to the rule. For example, here there is a slow Stock Rsi graph here, and for example, when I look at overbought and oversold areas, such as this particular point here, it is now oversold. It is dropped below the 30 value mark here. This pink line is representing the value between 30 and 70. Anything below drops below 30. Anything above raises above 70. The white areas are the oversold and overbought lines. This is overbought. This is oversold. What that means is when this line enters below 30, it is entering an oversold. And oversold means that it is the value of the price of whatever you're following, in this case Bitcoin, is below value. And when things go below value, they tend to bounce back up. For example, this line of resistance that I've created is a resistance line of an oversold trend. Now, if you look in the past, you can see that it's bounced here, it's went below, so there's a new pattern, and it has stayed above that line of resistance. As soon as it went down, it created a new pattern. Now, I'll show you exactly what I mean. So let's zoom out from June. Okay. Now, when this area drops below this support line, I know that there's a new phase coming. And you can see at the performance of Bitcoin, I just have to new phase of Bitcoin entered when it went below the line. And we look at here, this is, in the past, this was a very downward bear trend. At the point of reversal, it went below the support line and picked up just at the 30 mark. So it never entered the oversold area, which is an exception because it was near. So things aren't perfect by the book versus the real market. I look at the point of reversal, happened just at the 30 mark. And what I look for is on the candlesticks. I go back up here. We have a negative value on the MACD. It has crossed, the blue line has crossed the slow red line. We'll zoom in a bit. And so the reversals should look like this. There's a classic candlestick. For me, this is how I detect reversals. The candlestick just enters below the Bollinger Band, the lower Bollinger Band, followed by a bullish candle. Now, a bullish candle means, for me, that this candle should be closing above the previous candle's open, the previous bear candle. If this candle here didn't, well, let me zoom in again so you can see it a bit more clear. For example, this green candle closed below this previous candle's open. That indicates there is still a bearish trend. The next day, it happened again. This candle actually closed still below the previous candle's open. There is still a bearish trend. The next candlestick, the point of reversal that I look at, is this candlestick has closed, meaning it closed at this point here, above the previous candle's open, which is here. Or you can look at it from the candlestick before, so this one. So either one, it has closed above the previous candle's open. Now this is an example of an ongoing bullish pattern. Bull meaning it is on an upward trend. We verify that by looking at the next days. It opened at this point and it closed at the end of the day at this point. There is still a bullish trend happening. The next candle goes just outside the Bollinger Band, which is, for me, a caution of warning. There is still a bullish trend. Here there's a red candle. However, it does not close below the previous candle's open. There is still a bullish trend happening. As on the next, and the next, it drops, but it does not drop and close below the previous candle's open, which is at this point where my finger is. Now, I would bet on a long Bitcoin long option here to bet long until we got to a point of reversal. When the points of reversal happen dangerously here for me, there is a moment of warning when the values go way over the Bollinger Bands. The values for me, this means that it does not like to go outside the Bollinger Bands, therefore there will be a point of reversal soon or at this point. However, the next candlestick drops, but does not drop below the support line. It stays within the support line, within the green and gold lines. So there is still a bullish trend happening. Here, it drops just below the resistance line here of the simple moving average, the lower simple moving average line. And for me, this signifies there is a reversal coming very soon. I personally would pull out at this point, as I have made a gain from 29,696 up to 39,000. This is a big gain here. This is approximately 60% return. Now, as you can see here, the price actually ended up continuingly going up. As it went up, you can see there is still a bullish trend happening at this candle. It did not close below the previous candle's open. Which is here. So if we would have I want to stick to the strategy, I would have stuck to my strategy here and continuingly to hold that value. I would have waited for an overbought area to go over the 70% rule, value of 70. It just hits over the value of 70 here. Now this is a very important time because it is now reaching an overbought position. It has touched just above the Bollinger Band and is therefore set to drop in price, in my opinion. And in the previous day, it's still in the bullish trend because this candlestick has not opened until the day after the candlestick drops to an incredible value of a bear cycle. This continues until we get to this point. Here would have been a good time to buy, theoretically, because we're reaching an oversold area, and it still would have been a good time to buy, because as the days went on, 1, 2, 3, 4, this is about 2 weeks time. If we would have stuck to our strategy, the value that we would have bought it at would have remained the same. However, if I would have kept to the strategy of keeping that value until it picks up again, and it should have picked up again because it shouldn't go below this position here of an oversold area. There's a trend moving upward, and it reflects that after this day of a very bullish trend. So this is what I look at. This is what I've contemplated and tested to reflect my strategy. here would have been my area of selling a long position, and the price reflected a very overbought position, because this whole area here, when it goes above 70, it's very dangerous if you want to continue to hold. If I wanted to continue to hold a long position. A long position, again, is a position where I'm leveraging that the price will increase by 3 times. So what that means is, if I'm betting the price of Bitcoin will increase, for example, if 2% or 5%, any percent. The next day, if it increases 2%, for example, if the next day it increases 2%, I get 6% back, which is 3 times the amount, which is the leverage I'll be betting. If it, between this day and this day, is roughly around 40% back by leveraging trading a long position. I'm looking at big gains. I'm looking at trends. I want to leverage my money as smart as I can, as conservatively as I can, with a conservative strategy, reflecting a very attractive and risky position. So let's talk about what's going on at the moment. The price has dropped below the point of resistance that I've created, and a new trend is going on. Here would have been a perfect time to buy. However, this value, I saw it happen as I was lying in bed. This value dropped within 5 minutes before it went back up again. Within 5 minutes it went back up. I didn't have time to log in and buy and purchase because it was already at this value. And I thought this was a dangerous movement going on, and I wasn't ready to purchase once it went up again. So I'm waiting. I'm playing the waiting game of a bullish cycle. I waited until I was about to bet after this day's close. I do not bet until I have confirmed that this candle will signify a bullish upward trend. It has dropped below the previous day's open. Therefore, it is signifying to me a bearish trend. It has reflected true through the previous days. It has gone down. I'm looking to buy a long position. I'm waiting. I'm playing the waiting game and acting very patiently. I'm only using a couple $100 that I've saved for my upcycling, recycling project, and I want to use that money wisely. I want to treat it as if I had $200,000. I want to stick to my strategy and work very conservatively with aggressive profits. And here's a very interesting topping hat candle. This is a very interesting candle as it goes beyond the point of resistance of the middle Bollinger Band. And this is, to me, it's a warning of the upcoming future, that there is a reversal happening very, very soon. This is what I call the squeeze. When there is a topping squeeze, the price goes up, it drops back down, it closes at this moment here, opens to a bearish trend, opens the next day, reverses. There is a new point of reversal if this candle will go up above the previous day's candle, then it's going to signify that there is an ongoing bullish trend. So I hope that makes sense. I hope you understand what I'm trying to strategize for myself. This is a very, very risky endeavor. Please don't take my advice as your own advice and follow what I'm doing. Trading is 100% at your own risk. You know, I would never tell you to trade with my strategy or try to put that intention through. I just want to share my journey, share what I'm going through. I've worked 6 months to recycle. I recycle cans. I've collected cans all over the beach, recycled them for $200, and I'm trading that money to work towards a goal. I want to work towards a very profitable goal, a very interesting goal that reflects my values, and reflects climate change, reflects teaching people how to care for land, how to care for the country while I've been in Australia. And this is just very interesting because I've gotten into Bitcoin. I like the consistency. I like Bitcoin's aggressive movements, its volatile movements, yet still predictable. So at the moment, there's just a very interesting pattern. I would love to bet a long position right now. However, I'm still unsure because here is a very interesting moment. I will bet after this day will close if it reflects a bullish candle by not closing below the previous day's close. If this candle drops and closes below the previous days, I will not bet long position. I'll continue to wait until there's a true moment of reversal. Some people look at reversals on the volume trading pattern. Now this is a very risky area. This is to me just a signal. It's not a point that I would look at for a reversal, but more so a supporting point. Now I'll talk about this for a second. The reversals happen on the volume, and they reflect a reversal signal will happen, but not according to 100% the rule of what I'm about to tell you. Now, looking at a reversal, there's a pattern, an average of red volume bars. Now, a moment of reversal is when the green candle rises above the previous red candle. It has reflected that so in this pattern. Sometimes it doesn't rise above, and sometimes it meets at just this point. For example, if it raised here or here, that is okay, because if we look at the MACD, there is a negative MACD trend going on, and sometimes the green volume bar will not rise above, or it will be very, very close, which is a good indication. I wouldn't say I would rely on this particular reversal point, but it's a good indication that a reversal is coming soon. Now, if we look at the red candle, it's still below the previous day's green candle, signifying that to me that's still a good sign. While this candle still doesn't reflect, it kind of meets at this point just below the previous day's red here, which is okay because it's still, the MACD is still actually negative. It will only go over once the MACD goes over this point here, this horizontal line. Once it goes over the 0 marker, the closest I can get to is 23. Once it goes over, then it will reflect a reversal of the green will be over the red. I hope that makes sense. If you have any questions, please leave a comment. I'll be glad to clarify later. So we're at this moment, there is a squeeze in this candle, but it's still signifying a bullish trend. Now, I'm very confident that this price will go up, will continue to go up, but I will only bet once